Hey everybody, this is Alex Fensky. Now I have resolved my camera issues and ready to give you the November housing market update. I'm the lead agent for the Chicago Southland Homes team here at Keller Williams Elite, and give this market update each month using information from our data service through the multiple listing service, as well as from mortgage information that I get from mortgagenewsdaily.com. Here's what I want to get across to you. I'm going to go through a bunch of data and what it means. And this is all at the level of the northeastern Illinois region. So the greater Chicagoland metro area and a little bit beyond. You can't listen to what you're hearing on national news because it's so inaccurate, because there's no such thing as a national real estate market. And there's not even really as much a thing as a northeastern Illinois real estate market either. So what I'm going to go over here is important to know. It's different than what you're hearing on the national news, but it still isn't specific enough for you to make decisions on. So to make decisions, you need to call me, 708-808-0220, or email me, alex@chicagosouthlandhomes.com, so that I can give you advice on your situation and we can help you walk you through that, because everything I'm showing you is regional averages. And there are areas that are higher and lower in all sorts of categories throughout the region, and even inside of certain towns sometimes. So you need to contact me for specifics, but I think a lot of what I have to say here you'll find kind of interesting and different from what you're probably seeing in the headlines as you scroll through your newsfeed. We're going to touch first on some seller numbers, some numbers that we use to measure what's going on with sellers in the market. And the first of those is new listings. New listings, as you can see, right here, you can see they are down about 21% compared to last October. That means that there are 21% fewer people who listed their home last month compared to a year ago. It's actually the fewest new listings in any October, going all the way back to 2011. Right here, October 2011 was the last time we had 13,000, and in this case, 787 homes put on the market. So relatively few people put their homes up for sale last month. When you also look at the total number of homes that are available, that number is actually the lowest October on record. So let me zoom in a little bit so you can see. Here's where we finished October, 21,559. It was lower even than October last year by quite a bit, actually. Last October, there were almost 26,000 homes available. And again, you can go back as far as we have numbers, and there's never been an October even close to having as few homes available in our multiple listing service as there are right now. And it's actually less than half than it was just 3 years ago in October of 2019, our last normal pre-COVID year. So a lot of people are holding off on putting their homes on the market right now. Now, on the flip side, let's take a look at some demand metrics. This is how we measure buyers. And the first thing we're going to look at is the number of pending contracts at the end of the month. Let me zoom back in again for you here. Pending contracts, they often remain flat or go up a little bit September to October. That's seasonally normal. But we're down 26.2% compared to October of last year. In fact, the pendings and closings we're looking at are really the lowest dating back to almost about October of 2011, below pre-COVID norms, though it is only November 2nd as I give this report, and some of the data has yet to come in. So you'll see these numbers tick up a bit, but not a ton. What I've just talked about, though, is the number of sellers that are out there and the number of buyers that are out there, each in a nutshell or in a vacuum. And I told you that they both are down. So that doesn't mean that the market is bad per se. It means that there are fewer people selling homes and fewer people buying them. But that doesn't help us measure the relationship of the competitive balance. What is there more of, and who's winning right now? So that's kind of an interesting conversation. For that, we use the metric called months supply. This metric tells us if you have this many homes for sale and you have this many that are selling each month, how many months does it take to eat up all those homes for sale and sell them all off? 5 to 7 months of housing supply is considered a balanced market. Less than that as a seller's market means that there's more buyers than there are homes available, and the buyers have to compete for them. If there's more than 7 months of supply, It's the opposite. It's a buyer's market. The buyers have leverage because there's not that many buyers and there's too many homes for sale. And it's the sellers who have to compete for the buyers. And that causes prices to go down. Whereas the seller's market causes prices to go up, usually. Yeah, they're really throwing us some curveballs now because certain things you'd expect to be happening are not happening. You can see here that we are flat in supply. We have 2 months of housing supply right now. Last month it was 2.1, month before 2.0, 2.1, 1.9. We've been pretty flat with supply for several months now. And this is the same place we stood last October. And in fact, it is the tied for the second lowest October, or is tied for the lowest with last year. If I zoom out a bit on the timeline, you can see we're still at record low housing supply. Median days on contract, another measure of the balance between buyers and sellers. That's listing to contract. The median days between the home being listed and the contract being put in place is at 13. Tied for the second lowest on record for any October. Tied with 2020 and behind 2021, but lower than any other October days on market prior. So one big caveat to all these numbers here about supply is that in certain areas, I've done market reports recently where there actually was more than 6 months of housing supply, more than 7. One was like 9.1 months of housing supply. That is a buyer's market. They're out there right now. That was in a neighborhood in the city of Chicago. So when I tell you, you got to ask specifically about your area, I really mean that. If the average is 2 and there's places that are 1 or below, that means there's places that are on the other end of the spectrum. So you got to ask so you can get specific guidance from us. Now, what the balance between buyers and sellers tells us is usually what's going to happen with prices. If buyers are competing for listings, it's going to push prices up. If sellers are competing for buyers, it's going to push prices down. So what's happening right now? Well, prices are going up still, but just a little. October pricing ended at 1.5% higher than last October, makes it the highest October on record. But when you take a 12-month average, which eliminates seasonality, you can see that the curve is still going up, but is largely flattened. In fact, the last few months, let me zoom in for you here. The last few months, that 12-month average has been relatively flat. It's still up 5.1% over the prior 12-month average. But over the last few months, we've been looking at pretty much flat pricing or up 1 or 2% compared to the prior year. It doesn't make a lot of sense based on how low supply is, but that's contrasted by the rapid increases in mortgage rates. And so I think people are competing for listings using all the other tools in the toolbox and not using price quite as much. So buyers, I think, are competing more on higher earnest money, as is offers, better qualifications, larger down payments, faster closings, all the things that are not price. So when we talk about the cost of money, that's what I'm going to go to next. Mortgage rates. Now, I get my mortgage rate information from mortgagenewsdaily.com. It's a public website, so you can see this one. You can't use the last thing I was showing. I pay for that, and only agents get that. But you can go to Mortgage News Daily and see this information. You can see here, let me move myself over a bit, that currently the 30-year fixed rate mortgage today, November 2nd, stands at an average of 7.12%. It's the first time I've done this report that we've been over 7, so that's come up a bit since last month. You can see here also that you're not getting a whole lot of a benefit from going to a 15-year, about 3/4 of a point better, or from going to a 5/1 ARM. You're only about a 0.5 point better for that product right now. There have been times in the past where those spreads have been larger and it made more sense to make that change. But here's the thing, there's other financing programs available that are not just these kinds. And so it's important for you, if you're buying or looking at refinancing for some reason, that you look at all the products available and not just these basic ones. But here's what's going on with this. The Fed just made an announcement a couple hours ago. They're raising their federal funds target rate by another 3/4 of a point. That does not raise mortgage rates, but it does affect the economy, which changes mortgage rates. Down here, you can see right here, it's saying that the rate trend right now, mortgage-backed security prices, MBS, mortgage-backed security prices are significantly weaker so far today, which strong downward movement in the pricing of mortgage-backed securities widens the yield, which means that mortgage rates will go up. 3 hours ago, this thing was on the other end of the spectrum after the Fed announcement that said that mortgage-backed security prices were significantly stronger, which would tell you that mortgage rates were going to go down. It was hours ago. So the one thing about my report that I didn't have to change when I saw that this had changed was the next bullet point that says expect continued volatility. This chart is going to continue to be all over the place, especially every time there's a Fed announcement, a jobs report, and there's a jobs report coming out on Thursday, inflation news, any of that stuff, recession news. It's all going to affect mortgage rates in unpredictable and volatile ways. So if you're doing anything with a mortgage, you need to look around, look at all the different financing options that are available, and be open to different ways that you can lock or play the lock game, lock with a float down and things like that, because those rates are going to be changing daily. So in summary, what do you do? Number one, sellers should know there are still, in most areas, still more buyers than there are sellers, but pricing has largely flattened. So what I mean by that is sellers cannot price optimistically. You have to price aggressively. We have to price to our active competition more than we do the closed listings of 2 and 3 months ago. And we still really need to be diligent about preparing the home for sale, doing staging and things like that. For buyers, even though prices aren't going up that fast anymore, they're still going up a little bit. Mortgage rates are going up and wages are going up too, but not as fast. So all that combines to mean that the affordability index is dropping. When you take into account prices of homes, mortgage costs, and wages, that tells us for how much money people are making, how are they doing with being able to buy a home? And that is getting harder. The affordability index is decreasing. So because of that, I recommend that you lock in your affordability as you can right now. And then in the future, if rates drop, you can refinance. You can do so at a very low cost. But you can't change when you bought a home, and you can't change the price you paid for a home, but you can change the mortgage rate on the home at a very little cost. So I would encourage you to lock in your affordability now before that continues to erode. My last piece of advice is for everybody is, again, as I said at the beginning, don't take this as specific advice for your scenario. This is a lot better than what you might see on national news, but it's still not going to tell you what's going on in your neighborhood. I can tell you what's going on in your neighborhood. I can tell you how many months of supply there are for your type of home in your area, and tell you whether you're in a seller's market, a buyer's market, a balanced market, and what direction things are headed for you. So again, I would encourage you to reach out to me directly, 708-808-0220 on the phone. Email is alex@chicagosouthlandhomes.com. Reach out and let me know how we can help you with your real estate plans and taking all this information and making it relevant to you. So thanks a lot, and hope to hear from you soon.